The FBI file was 847 pages long. Not approximately 847. Not somewhere in the high 800s. 847 pages divided into 12 tabbed sections, each one representing a different layer of a fraud operation that had been running quietly, methodically, and almost invisibly inside communities just like mine. Communities full of working families, retirees, first-time buyers, people who'd scrimped and saved and finally arrived at something that felt like stability. The final tab was labeled Beneficiaries of Unauthorized Reserve Fund Withdrawals. My HOA's name appeared on page 612. Cloverfield Commons. Dunmore, Caswell County, Ralton. I am not a detective. I am not a federal investigator. I am a 42-year-old certified public accountant and single mother of two who bought a 4-bedroom house on Sycamore Ridge Drive in the spring of 2019 because it had a backyard wide enough for a trampoline and sat inside a school district that wouldn't make my daughter cry about going in the morning. What I am, what I have always been, even before the licensing exams, even before the undergraduate coursework, is someone who reads financial statements the way other people read novels. Slowly, with attention to what's missing as much as what's there. That habit is the reason a property management company called Vantage Residential Solutions, LLC, no longer exists. Before we go any further, drop your city or state in the comments right now. I want to know where you're watching this from. Because what happened in Dunmore didn't stay in Dunmore. By the end of this story, you're going to want to know whether Vantage ever managed a community near you. I closed on 4417 Sycamore Ridge Drive on April 11, 2019. The house cost $387,000. I put down $77,400. Every dollar I had accumulated from the divorce settlement, and 4 years of freelance forensic accounting work I'd taken on evenings and weekends to build back something that felt like a foundation. My children were 9 and 11. My daughter Becca had a written list of requirements for the house. My son Owen had exactly one request: a garage for his bike. They are both, in their own distinct ways, very clear about what they want. I don't know where they got that. Cloverfield Commons presented itself exactly the way a well-managed HOA community is supposed to. 112 homes. Annual dues of $2,400 per household. A reserve fund that the seller's disclosure documents reported at $847,000 as of December 31, 2018. A management contract with Vantage Residential Solutions, LLC, headquartered in Crestfield, Ralton, a company that had administered Cloverfield's finances and operations since 2015. I read every document provided at closing. This is not unusual for me. The reserve fund study showed projected community expenses over the following decade: clubhouse and pool enclosure roof replacement, repaving of the 2 private interior roads, and reconstruction of the retaining wall running along the north perimeter of the development. Total projected capital need, approximately $1.1 million over 10 years. The $847,000 in reserves put the community at roughly 77% funded. Not ideal, but responsible. The kind of number that says the people managing this community are paying attention. I handed Becca the key and watched her run through every room announcing her intentions for each one. I didn't think about the reserve fund again for almost 2 years. In February of 2021, a notice arrived in every mailbox in Cloverfield Commons. The HOA board, a 5-person volunteer body I had spoken to exactly twice since moving in, was calling an emergency meeting. The agenda had a single item: a proposed special assessment of $3,100 per household to fund emergency repairs to the clubhouse roof and the north retaining wall. I attended. About 40 homeowners did. The board explained that reserve funds had been drawn down more aggressively than the original study had projected, and that the community faced an immediate funding gap. The representative from Vantage Residential Solutions, a man named Derek Wohl, who arrived in a very clean black Audi and spoke with the smooth, efficient confidence of someone accustomed to not being questioned, presented a slide deck full of red numbers and a single solution that involved everyone writing a check. I sat in the back row and did arithmetic on a yellow legal pad. 112 households, $3,100 each, $347,200 in special assessment revenue. The repairs being cited, roof patching and retaining wall stabilization, should not have cost more than $180,000 to $220,000 based on construction pricing I'd encountered regularly through my forensic accounting clients in the trades sector. I raised my hand. "Can we see the current reserve fund balance?" I asked. Derek Wohl smiled. It was the kind of smile that surfaces when a person has been asked exactly what they hoped wouldn't be asked. The reserve fund study and current balance figures are part of the annual report that was distributed to homeowners this past fall. "I didn't receive an annual report this fall," I said. "Can you give us the current balance tonight?" He said the precise figure wasn't available at the meeting, but would be included in the board's written response to homeowner inquiries. Then he moved on to a discussion of contractor bids. I wrote 3 words on the legal pad: "Get the numbers." The annual report for fiscal year 2020 was not in my files. I submitted a written request to the HOA's official contact email, managed by Vantage, and asked for a copy. 11 days passed. 2 follow-up emails were sent. On day 13, a 4-page PDF arrived. It was formatted beautifully, professionally, and almost completely uninformative. The reserve fund balance listed for December 31st, 2020, was $214,000. In 2 years, the reserve fund had dropped from $847,000 to $214,000, a reduction of $633,000. The annual report attributed the drawdown to 3 expenditures: a community infrastructure project totaling $289,000, a capital improvement initiative totaling $187,000, and something listed simply as administrative reserve reallocations totaling $157,000. I have been a CPA for 17 years. In 17 years, I have never encountered a line item called Administrative Reserve Reallocations in a legitimate HOA financial report. That phrase doesn't correspond to any standard accounting category. It is not a term of art. It means nothing, or rather, it means something. It means someone needed a category that sounded official enough to go unquestioned. I want to ask you something, and I need you to be honest in the comments. If you opened your HOA's annual report and saw a line called Administrative Reserve Reallocations, would you know that was wrong? Most people wouldn't. That's not a failure on their part. That's a feature. Vantage built their entire operation on the assumption that homeowners would read a well-formatted PDF and conclude that the professionals had everything under control. I submitted a formal written request under Ralton State Statute 55-3-1102, which obligates HOA management companies to provide itemized supporting documentation for all expenditures exceeding $10,000 within 21 business days of a written homeowner request. I gave them 25 days. Generous, I thought. On day 23, I received a letter on Vantage letterhead, signed by an attorney, informing me that the documentation I had requested constituted proprietary operational material, and that my inquiry had been reviewed and denied in accordance with the terms of the existing management agreement. A legitimate company with nothing to hide does not retain counsel to tell a homeowner that financial records are proprietary. That is not a defensive move, that is a confirmation. I wrote one word in my notes that evening. Good. In forensic accounting, you don't begin by looking for the crime. You begin by looking for the inconsistency, the number that doesn't fit, the categorization that doesn't cohere, the pattern the data has no business producing. The crime introduces itself once you've spent enough time with the inconsistency. I began pulling everything I could locate on Vantage Residential Solutions. They were incorporated in Caswell County in 2013 under the name Vantage Property Management, LLC. In 2015, they rebranded as Vantage Residential Solutions and expanded their contract portfolio. By 2021, their own marketing materials claimed management of 37 HOA communities across 3 counties: Caswell, Fenwick, and Drumlin. 37 communities. If each reserve fund averaged $600,000, a conservative figure for established suburban developments, that placed $22.2 million in restricted community funds under Vantage's administrative control. Something cold settled in my chest when I wrote that number down. I submitted public records requests to all 3 counties, asking for any complaints, enforcement actions, or civil filings involving Vantage between 2015 and 2021. The compilation took 6 weeks. When it arrived, I found 14 consumer complaints lodged with the county offices during that window. 12 had been marked, resolved, or closed with no action. 2 remained open and unassigned. I contacted the homeowners behind those complaints. 9 agreed to speak with me. Every single one described the same pattern: reserve fund balances that had declined faster than any capital project could justify, expenditure categories that defied standard terminology, and requests for supporting documentation that were either ignored, delayed well past legal deadlines, or explicitly refused. One of those homeowners was a retired civil engineer in Drumlin County named Franklin Oakes. He had done something I hadn't. In 2019, he'd hired an independent accountant to formally review his HOA's reserve fund records. The accountant had produced a written report concluding that the fund had experienced what she described as systematic misallocation, consistent with unauthorized diversion of restricted funds. Franklin had paid $4,200 out of pocket for that report. The HOA board had received it, thanked him, and declined to take any action. I asked if I could have a copy. He emailed it to me within the hour. The accountant's name was Dr. Priya Nandal. She held a doctorate in financial forensics from Westfield University in Crestfield, and currently held a faculty position there. I emailed her the next morning. Dr. Nandal and I met at a coffee shop in Crestfield on a Friday afternoon in late August of 2021. She was exactly what her report had suggested: precise, professionally unimpressed, and carrying the particular quiet fury of someone who had already found the answer once and watched it be dismissed. She walked me through what she had documented in the Drumlin County HOA's accounts. Vantage had developed a methodology she called layered reallocation cycling. Here's how it worked. Vantage held authorized signatory status on the reserve accounts of the HOAs they managed. This is standard practice. The management company needs to pay vendors and contractors on the community's behalf. Every quarter, Vantage would initiate a transfer from the HOA reserve account to an entity they described as an administrative escrow, framed in documentation as a temporary holding account for upcoming capital expenditures. That administrative escrow account was controlled entirely by Vantage. Funds would remain there briefly, sometimes as few as 8 days, before being transferred again, this time to a company called Crestfield Capital Management Partners, LLC. Crestfield Capital had a single registered agent, no public-facing employees, and a registered address at a private mailbox service on Route 9 in Crestfield. The funds transferred to Crestfield Capital never returned to any HOA account. Dr. Nandal had traced approximately $1.4 million in unauthorized transfers through this pipeline from the single Drumlin County HOA she'd examined, over 3 fiscal years, through a chain of transactions designed to obscure the source and destination at each step. I built a projection model that Sunday afternoon while the kids were at their father's house. Using the loss rate she'd documented, unauthorized transfers as a percentage of reserve fund size, I estimated total unauthorized transfers across Vantage's full 37 community portfolio at somewhere between $8 million and $14 million. I want to stop here, because this is something that still keeps me up some nights, and I genuinely want to hear what you think in the comments. Doctor? Nandal had completed her analysis in 2019. The evidence existed. The report existed. And it went exactly nowhere because the HOA board didn't want to absorb the liability of what acting on it would require. How many communities right now have a report sitting in a drawer somewhere that someone decided was too inconvenient to act on? I called the FBI's Financial Crimes Division in Crestfield on a Monday morning in September 2021. I was transferred twice. I spoke with an agent I will refer to as Agent Mercer, explained in 4 minutes what I had found and what I believed it meant, and was asked to submit a written summary with supporting documentation. I sent 43 pages. What I didn't know when I mailed those 43 pages is that the FBI had already been looking at Vantage Residential Solutions. Not for HOA fraud. For something else. In early 2020, a compliance examiner at Caswell Federal Savings had flagged unusual deposit patterns in an account held by Crestfield Capital Management Partners. The deposits were structured in amounts just below the $10,000 federal currency transaction reporting threshold, a technique called structuring, which is independently a federal crime under 31 U.S.C. Section 5324. The bank filed a suspicious activity report. It moved through the federal system. It landed in the Financial Crimes Division's queue. It was being developed. My 43 pages connected 2 threads that federal investigators had been working to tie together for over a year. Agent Mercer called me back 11 days later. He asked whether I'd be willing to work with the investigation team in an advisory capacity. He was careful with his language. He said my financial analysis was consistent with what the investigation has independently developed, and that my familiarity with HOA accounting structures would be operationally useful going forward. I said yes. I want to be honest. I had limited understanding of what I was agreeing to. Over the following 8 months, I provided analysis, explained HOA, financial regulatory standards, and interpreted documents that the FBI was obtaining through subpoenas to Vantage's banking relationships. I did all of this while working my regular accounting practice, raising 2 children through a school year, and maintaining the total appearance of a person to whom nothing unusual was happening. I told 2 people. My mother, who lives 3 hours away and responded by mailing me a canister of pepper spray, and my attorney, whom I retained in October 2021, after deciding I needed someone whose job it was to tell me if I was inadvertently creating legal exposure for myself. The special assessment, by the way, passed in March of 2021. I paid my $3,100. I smiled when I handed over the check. I took a photograph of the check before I put it in the envelope. Evidence is evidence wherever you find it. On a Tuesday morning in April of 2022, federal agents executed simultaneous search warrants at Vantage Residential Solutions' Crestfield office, at the registered address of Crestfield Capital Management Partners, and at the private residence of Vantage's CEO and sole principal, a man named Gregory Torrance Holt, 55 years old, resident of Fenwick County. I found out it had happened because Agent Mercer called me at 8:47 a.m. and said, simply, "It's done." I was in the school drop-off line. I set the phone on the passenger seat. I watched a crossing guard help a child with a backpack that was nearly as large as he was cross the street. I sat there for a moment in the particular stillness that follows the end of a very long effort. Then I drove to work. Local news ran a brief item that afternoon, a financial crimes investigation in Crestfield, details pending. Vantage's website disappeared from the internet within 48 hours. Their main phone number rolled to a voicemail no one was checking. Within a week, every HOA in their portfolio had received a notice. Vantage was temporarily suspending operations pending an internal compliance review. 112 households in Cloverfield Commons, along with thousands of other homeowners across 3 counties, suddenly discovered they had no management company, uncertain access to their operational accounts, and no clear picture of how much money remained in their reserves. The Cloverfield board called an emergency meeting. This time, I was not sitting in the back row. I want to ask you something directly, and I'm not going to pretend I have a clean answer. When I sat in that emergency meeting and the board was asking questions I already knew the answers to, when my neighbors were panicking about what was happening to their finances, I said nothing. I had known for months. I stayed quiet to protect the integrity of the federal investigation. Some of my neighbors had taken out small loans to pay the special assessment. One family had postponed a medical procedure to cover the $3,100. Did I make the right call? I'm still not sure. Tell me what you think. The investigation required 14 additional months to develop into criminal charges. During that period, I continued cooperating with the prosecution team and learned, in pieces, the full architecture of what Holt had built. Gregory Torrance Holt had incorporated the original Vantage entity in 2013 with a single HOA contract and $45,000 in startup capital provided by a private lender. A lender who, it later emerged, had no awareness that his loan was seeding a fraud operation. By 2015, Holt had developed the layered reallocation cycling methodology. By 2021, his portfolio had quietly grown to 39 communities, not 37, as publicly represented. 2 additional HOAs were managed under subsidiary entity names deliberately obscured from Vantage's marketing materials. The total sum transferred from HOA reserve accounts to Crestfield Capital Management Partners between January 2016 and April 2022, $11.4 million. Of that amount, $2.1 million had been directed to Holt's personal expenses. A lake house on Fenwick Lake, purchased in 2018 for $780,000, a Porsche Cayenne and a Range Rover, extended travel to Europe and the Caribbean, what the federal indictment memorably categorized as various luxury goods and entertainment expenditures. The remaining $9.3 million had been laundered through a network of 4 additional shell companies, partially recycled into Vantage's operational expansion to sustain the appearance of a thriving legitimate business. And, in the move I found most audacious, used to acquire a small property management software firm. Vantage then required all 39 of its managed communities to license that software at $340 per month per community. Additional revenue, additional concealment. The man had constructed a machine that fed itself. Gregory Torrance Holt was indicted on June 3, 2023, on 18 federal counts: wire fraud under 18 U.S.C. Section 1343, money laundering under 18 U.S.C. Section 1956, and structuring financial transactions to evade reporting requirements under 31 U.S.C. Section 5324. 4 Vantage employees were also charged, including Derek Wohl, the man with the clean black Audi who had smiled at me in February of 2021 when I asked to see the reserve fund balance. Holt pleaded not guilty. His defense team was expensive. The trial opened in November of 2023. I testified for 2.5 days. I had never testified in federal court before. My attorney had prepared me thoroughly. The prosecutors had walked me through every exhibit I would be asked to explain. I knew the material with the kind of intimacy you develop when you've spent 2 years living inside someone else's financial architecture. None of that preparation quite accounts for what it feels like to sit in a federal courtroom with 200 people watching and the man whose fraud you dismantled sitting 15 feet away in a gray suit that probably cost more than my monthly mortgage. Holt looked smaller than I remembered. People tend to, I think, once they're no longer the most powerful person in the room. I testified about Cloverfield Commons Reserve Fund trajectory. I explained the layered reallocation cycling methodology to the jury using a chart I had built that traced a single $47,000 transfer from our community reserve account through 2 intermediary entities to a wire transfer sent to a shell company in Nevada that had been incorporated, received funds, and dissolved, all within 11 months. The defense cross-examination ran 6 hours. They challenged my credentials, my analytical methodology, and what they characterized as a personal financial grievance against Vantage. They noted, with some emphasis, that I had paid the 2021 special assessment without filing any formal protest at the time of payment. I told them I had been asked by federal investigators to maintain normal behavioral patterns while the investigation was active. I watched 3 jurors write something down when I said that. On December the 14th, 2023, the jury returned guilty verdicts on all 18 counts. Gregory Torrance Holt was sentenced on March the 7th, 2024. 12 years in federal prison. Restitution ordered in the amount of $11.4 million. Derek Wohl, 3 years, $840,000 in restitution. 3 additional Vantage employees, sentences ranging from 18 months of supervised release to 4 years of incarceration. Crestfield Capital Management Partners was formally dissolved. All identified and traceable assets were seized. I want to leave you with one question before we reach the end, because I think it's the most honest question this story raises, and I don't have a satisfying answer. The $2.1 million Holt spent personally is gone. The lake house sold at federal auction for $680,000. The vehicles brought $147,000. Total assets recovered from all sources. Approximately $4.2 million against $11.4 million stolen. For Cloverfield Commons and the 38 other communities that lost reserve funds built from monthly dues paid by working families over years, complete restitution may never arrive. Does 12 years in federal prison feel like justice when the money is still missing? I want to know what you think, because I've been turning that question over for more than a year, and I haven't settled it yet. The restitution process for Cloverfield Commons ran through most of 2024. Working with a court-appointed receiver, our community recovered $183,000 in directly traceable funds, a fraction of the $633,000 that had been diverted from our reserve account over 3 years. The federal restitution schedule, distributed across multiple claimant communities, holds the possibility of additional distributions in future years. No one is holding their breath for the full amount. The $347,200 collected through the 2021 special assessment was formally documented as a community loss attributable to the fraud and incorporated into the restitution claim. Whether it will ever be fully returned is a question the legal process has not yet answered. What happened in the aftermath is what I'm most proud of, and it wasn't my idea. It was Franklin Oakes's, the retired engineer from Drumlin County who had paid $4,200 in 2019 for a forensic report that an HOA board chose to bury. Franklin proposed that the homeowners who had contributed to the investigation, 9 of us across 5 communities, pool experience and establish what we called the HOA Accountability Resource Collective. It is not a lobbying organization. It is not a legal clinic. It is a free financial document review service for homeowners who suspect mismanagement in their HOA's reserve accounts and don't have the professional background to recognize the warning signs in what they're looking at. We opened in January of 2024. In our first 8 months, we reviewed financial documentation from 63 HOA communities across Ralton and 2 neighboring states. We identified irregularities warranting further review in 19. 4 of those 19 have since filed formal complaints with state regulators. 2 are currently working with private attorneys. Dr. Nandal serves as technical advisor. She does it without compensation. She says it is the most useful work she does. I am still at 4417 Sycamore Ridge Drive. Becca is 16 and has strong opinions about everything, which I find simultaneously exhausting and genuinely wonderful. Owen just got his learner's permit, which is terrifying in a way that has nothing to do with HOA fraud. The trampoline is still in the backyard. Cloverfield Commons has a new management company, a small local firm that the board vetted extensively, using a background check and financial audit protocol that I helped develop. The reserve fund currently sits at $261,000. It has a long way to go, but it grows every month, and every month when the statement comes in, I read it. Carefully, all the way to the end. I want to say one final thing before I go. I am not exceptional. I am not a crusader. I am a person who happened to have a professional skill set that was relevant to a problem I happened to be standing next to. What allowed Gregory Holt to steal $11.4 million over 6 years is not that he was particularly sophisticated. He was, but sophistication alone doesn't explain 6 years of uninterrupted success. He succeeded because most people trust the professional-looking PDF. Because most people assume that a quarterly report with clean formatting and confident terminology has been reviewed by someone qualified to catch what they can't. Because most people, reasonable, busy, trusting people, look at administrative reserve reallocations and conclude that it must mean something. It doesn't. And now you know that. Get your HOA's annual financial report. Read the reserve fund section. If there is a line item that uses language you don't recognize, ask someone who will. The HOA Accountability Resource Collective has a free guide on how to request documentation from your management company, what your state rights are, and what warning signs look like in practice. Link is in the description. Because the best outcome isn't just stopping one man. It's making sure the next person doesn't have to build the case alone. This is HOA Nightmares. I'll see you in the next one.